sectors are concerned early, but the big pain point has been the IT services index that is starting about 0.25% higher. So 42,024 as far as the Nifty IT index is concerned. Market breadth out of the gate seems to be positive in the ratio of about 2:1. 20 stocks are lower. The heat map on your screen, 20 lower, and about 30 stocks are starting up in the green. So that's the first look at market open. Surabhi.
Okay. Extremely quiet. Let's look at what's moving on the Nifty 50. Maruti Suzuki is the leader right now, 1% gain, followed by SBI Life. Then comes in Shriram Finance. And then you have a few tech names that have been sulking in the last couple of sessions. They're finding some green today. So Infosys would be one of those stocks. Tech Mahindra, LTI Mindtree, a little bit of a little shade of green on some of these names. There's a Nestle, Tata Consumer, about 0.5% up on these stocks as well. Bajaj Auto and Tata Motors. So basically the early trends are auto seems to be fine because you've got three names, Maruti, Bajaj Auto, as well as Tata Motors on the upside. And then you have a little bit of buying on IT. On the flip side of the screen are the banks. Axis Bank, ICICI Bank, weak trends to begin with. HDFC Bank is also absolutely at the flat line. So depending on which way these stocks start moving, we'll have more clarity on the market direction. Hero Moto is not participating in the other auto move. It's actually down about 2% as we speak. ONGC is also a bit of a weak link today. Let's see where the metal stocks are because they've had a good couple of days. Tata Steel is down about 0.5% as we speak. JSW is also on the lower side, as is Hindalco. So a bit of a cool-off in the metals universe. Very, very quiet.
Well, that's right. Let's focus on a few more names than Trent. They like what Citi has to say. They have initiated with a buy rating. They have a target price of 9,250. They're talking about a potential 21% upside, and that's why they've included Trent in the Pan-Asia High Conviction Focus list. So that's the reason why, in fact, that stock is higher. It's up closer to around 3% or thereabouts. On the flip side, you have Manappuram. That's a little bit under pressure. We understand that in money control exclusive states that Manappuram's MFI arm, that's Ashirwad Microfinance, has deferred listing plans. So we'll require some clarity on that front, but that stock is a little bit lower. Crompton, the stock is down close to around 3% as we speak. So that's the one that's taking a bit of a knock on the downside. What else is doing well? IDFC, that's higher in today's trading session. So that one has popped up in trade. I think I saw Reliance Infra took a bit of a breather. The stock was down 2.5%, but that stock has been getting bought on dips. So let's see whether or not it bounces up. But that's already rallied from around 230 to 330, all of this in a matter of a month or so. So just keep that in mind. For the time being, it's recovered from the low point of the day. Reliance Power continues circuit to circuit up close to around 5%. Easy trip after the dropping that we saw. It's bounced back a little bit. And IEX, Investec is positive on the stock, but it's struggling to even move into the green. Stock has corrected more than 15% in the last 3 sessions.
Well, I think, it's got a bit more action as far as indices go as well. We've got the market, which is at about 26,027. Slightly above yesterday's high, about 10 points above yesterday's high. What do we have with regards to what else is going on? So Trent is the second biggest volume-led gainer with a 3% gain. And I think that Citi note is sort of showing up with some impact. Prestige Estates is another one which is up 2%. 1880 or so on Prestige Estates. It's got large volumes on it. Signature Global is another one, right? I mean, real estate name out of Gurgaon, 3% higher. 1630 on Signature and volumes as well. Rainbow Hospitals, 5.5% up, 1460 on it. And it's got decent-sized volumes. So that's another one. Mukta Arts, it's got volumes and we don't ever sort of, it never shows up with volumes like this, but 15% gain on this one. Look at almost 1 million shares now on Mukta Arts. Zaggle is up 2.5%. We'll be speaking with the management a little later. 441 on Zaggle. Stock's done very well recently. Uno Minda is up 1%. Triveni Turbines, Skipper Limited, etc. I mean, these are basically what's coming up with, right after market open. Look at Policy Bazaar. Policy Bazaar has lost 10% in the last 2 days. It's down another 3%. We reported from sources that they're looking at entering the healthcare segment. Hospital, 1675, about 3% down. We've got Saregama, which is down 3%. Crompton is down about 3%. NMDC is down 1.5%. There is, of course, Hero, which is the biggest loser with a 1.5% cut. So this is just the first couple of minutes as far as market open is concerned. Rana Gupta is with us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thanks very much for your time. Rana, the more and more, slowly but steadily, the drumbeat continues that, reallocate your portfolios, tilt your portfolios, and do two things. One, get into names where you're really convinced, and of course, generally be convinced more in the large cap space than in some of the smaller names. That's the general view from the institutional community that we speak with, Rana. Do you share that view as well?
Good morning. Yes, I think that's a pretty relevant point because the market has been, melting up because of the flows and lack of, let's say, good quality paper supply from the corporates. So I think to put this in context, let's look at the return numbers because valuation numbers we have discussed often. I think the Nifty in last 2 years has given returns of 20% plus CAGR. That of the mid cap is 40%. Now compare this with the long-term returns. Nifty's long-term returns is about 13%, and that of mid-cap is 19%. So first point is that the Nifty and NSE mid-cap are somewhat, they're giving higher returns than their average. Some of it is justified because the macro is improved, corporate profitability is improved, but may not be all of it. And then secondly, you can see the mid-cap over a long period of time has given 1.5x, but now they're running at 2x. So that is because of PE expansion. So could there be some consolidation expected? I think, yes, that's pretty much possible. Now, taking a step back, if you look at the market action, we tend to look at only last 3-4 months. But if you look at even this year, January to June, the market was in a very tight 5% range. So can we go again into that kind of consolidation range at 5% for next 3 or 6 months? That's pretty much possible.
Okay, all right. So, Rana, hi, morning, great to have you on. Just a sense, if the market, first of all, do you see any immediate downside risks? Any reason to believe that one should be taking some profit off? And if not, then I think then one moves to the question of then how do you add incremental money to the market?
Right. I think the downside, downside risk, right? One reason why one could potentially argue for downside risk is to say that downside could come from the earnings not meeting expectations and valuation too high, so on and so forth. But we think although the micro looks a little soft, earnings will not disappoint by a big margin. Now coming to the flows and the PEs, the valuation, it will not correct on its own. The risk that I see and the valuation where it could correct if the supply of papers overwhelm the demand for equities. And as we understand for the month of October, November, quite a few large IPOs are planned. And we'll have to wait and see how the responses are those to IPOs. If, let's say some of them do not give the expected returns, I think that could cause, that could lead to some soaring of sentiment and therefore some correction in the PE ratios. So that is one risk. Definitely the supply and the valuation of the supply that we're looking out for. Secondly, I would also like to highlight that from here till about February, there are quite a few state elections. Now, we are fully aware state elections do not alter the equation in the central government. Nonetheless, there could be a sentiment impact if the state election outcome were to be adverse to market expectations.
All right. Hi, Rana. Good morning and good to see you. And since you briefly spoke about these IPOs, two IPOs that listed in the stocks ran away was Ola as well as Bajaj Housing from very different sectors. But the stocks ran away and actually from the peak, they've corrected a fair bit. What's your view on a couple of these names? Some of them have big potential going ahead, but they seem to have run ahead of themselves.
So without getting to any company specific, I would say that the IPOs that have come, they are either from very good corporate houses or in a segment which is not very large in Indian markets, not very large float available. Now, investors want to either own a very good corporate issuing paper and or they want to also own these new emerging areas. Now, the thing is that the supply of issuers papers is so low and everyone wants to own. It is the pure demand supply that is taking the price up. I think if you look at any valuation parameters, these would appear to be factoring in like probably FY27, FY28. So that's just happened due to the supply of the supply of papers, but the demand being much higher than that.
Okay. The other sector that sort of we're looking at obviously is, on the whole manufacturing side, the big debate has been whether the best of it from a market perspective, from a stock appreciation perspective, whether that's behind us or whether all dips should be bought. So when you talk about a large theme like manufacturing, if you could break that down more in a more granular basis, what's your overall thought? And then if you were to invest, again, fresh capital, then what part of it would you be looking at?
No, sure. I think that's a great question. And we have been highlighting, I think, since about April, May, that manufacturing as by and large a big theme is kind of peaking out. Now let's get to a more nuanced approach. Let's break down manufacturing into broadly two parts. One, which is impacted by government spend and policy, both. So this will be typically a railway, defense, power segment. These stocks over the last 2 to 3 years have seen tremendous amount of rally, and the valuation there looked very expensive. Now, by definition, all these companies are now factoring in very good execution, but on the ground, that may not be the case. I think these companies will continue to do well as corporates, but the stock price just gone way too high, not to justify these kind of multiples. Then come to the other side, which is a policy-driven. Now, Indian government has taken several policy in the areas of electronics manufacturing, in terms of, let's say, energy independence, so on and so forth. We see some opportunity there, although I think mostly in the electronics manufacturing, because that's a very large addressable market in India as well as globally. You might have seen that one of the world's largest phone maker is increasing their sourcing from India. So there could be plays around that value chain. So that is something that we like. In the industrial goods area, some of the global companies are increasing their sourcing from India. That is something we like. But I think going to even the energy value chain, I think there also, I think the stocks, because of, again, lack of quality supply available, has run quite a bit ahead of their fair valuation.
If you can quickly pull up the Policy Bazaar stock, I just want to make a quick mention of it. Volumes now are humongous. It's the number one volume-led loser right now on the NSE. And take a look at the cut that's coming through. It's down 5%. Actually, we should put an alert with our story. So that's basically what 16% down in 3 days flat. 1634. Rana, I don't want you to comment on Policy Bazaar per se, but the news story is that they are looking at getting into hospitals. This is what we put out yesterday. As an investor, how do you look at it? I mean, largely a platform company now getting into the healthcare space. And anything you say is not to be construed as investment advice. So go on. Feel free.
Right. I think, again, without specific reference to any platform, I think healthcare as a space, we are quite optimistic. We see large opportunities. Because if you look at the large hospitals, right, where also the stocks have done very well, their ARPOB are like 70,000 rupees, which is considered quite high for, let's say, if you were to consider the income of majority of Indians. So there exists a large opportunity to provide affordable healthcare and with affordable insurance coverage. So I think there's a large, again, untapped opportunity there, but that's out there. How to capture it, what kind of plans one would make, and what kind of capex it will require. That I think someone needs to do much real work on. I would also have to highlight one thing. Ultimately, as stock investors, we make money on the profits, not on the TAM expansion. On that, we make money on corporates capturing that in profit in the profit after tax and delivering good return ratios, and that will come through execution. But top down is the space of affordable healthcare, affordable insurance. That space as such is quite exciting.
Okay. All right. Rana, we'll leave it on that note for today. Thank you very much for joining in and giving us some perspective on the market. The market, by the way, I mean, it's such a quiet start, but it's now trying to build a little bit, 45 points up on the Nifty. You've got some red on the mid-cap screen, so let's see how that goes along. Still about a 180-point dip on the mid-cap index. So a bit of a diverging trend. It looks like there's some interest in large caps and profit-taking continuing on the mid-cap side. Let's move on now to the big story that came through yesterday. The Ministry of Power has finalized a national electricity plan for 2023 to 2032. The total cost of the plan over this entire period is going to be 9.15 lakh crore rupees. That's the kind of investment we're talking about. The National Electricity Plan aims to meet peak demand of 458 gigawatts by 2032. One of its key targets is to facilitate renewable energy integration as well as green hydrogen loads into the grid. To talk about this development, we have with us Mr. Anil Gupta, CMD of KEI, and we also have Amit Uplenchwar, the director at Kalpatru Projects. Thank you, gentlemen, so much for joining in. So we've got the big headlines in yesterday with the big targets going all the way up to 2032. Let's get your opening thoughts on what you think about this plan and whether the targets are achievable and the investment that is being spoken about. Mr. Gupta, you go first. What did you make of some of the bigger headlines that are in of the plan as of now?
Yeah, thank you for inviting me to the show. This is a very ambitious plan. Basically, as the power generation is increasing, whether renewable power or, with this coming up of this pump storage projects, new thermal capacity generations and green hydrogen, which is talked about. So it is very important to, undertake increase in the transmission capacity to evacuate that power and bring it to the grid and then subsequently to the distribution network so that the consumer is able to use it. So the plan is to expand this network, this circuit kilometer, by almost 50 to 60%, and the transformation capacity of the substations also by 70 to 75%. It is a big opportunity because we have to, feed the demand of power to data centers, to a lot of artificial intelligence networks, growing demand in the urban and rural areas and industries. So unless the power transmission is jacked up, it will not reach to the targeted consumers. And it will bring a huge opportunity to EPC companies, to electrical cable companies, the transformer manufacturers, and many other companies who are supplying this to this sector.
So absolutely. And, I think this is becoming more and more clear that if we have to feed power to all these data centers and, what we're talking about on the renewable side, you've got to be investing in the grid. And I think that's what the plan really focuses on as well. So just quantify the opportunity if you can. I know it's early days, but for KEI, for instance, what could this mean in terms of revenue potential? Not this year, but let's talk about let's say a 3-year plan.
Only from this, I think the opportunity is around 50 to 60% more sales from the cables in this sector. But it will have a compounding effect because the power, from these transmission lines will be delivered to the distribution companies, to household sectors, to real estate, to industries. So it will have a compounding effect by around 2.5 to 3 times compared to what it has a direct impact. So I think it will, triple the requirement of products used in the power systems through transmission of this type of power.
Mm-hmm. Got that. And that's well put. Gentlemen, good morning. Great to have both of you here. Prashant this side. Mr. Gupta, if I can request you to don, they say that businessmen often make the best analysts. So I'm not asking you what the benefit for KEI will be. If you can just step back, and when you say this is transmission capex, right? It'll require sort of cables, wires, etc., as you said, and companies like you will benefit. But what else you think in the value chain in transmission capex? What are we looking at? If you could just give us a bird's eye picture, and what kind of companies will benefit?
Prashant, it will benefit all the EPC companies in this sector. It will benefit the conductor manufacturing, ACSR conductor manufacturing companies. It will benefit the transformer manufacturing companies and all the companies like ABB, Siemens, or the companies who are supplying, products to the power sector, power transmission, generation, and distribution sector. Because once the power is there, it has to be used. It has to be used by first by the distribution company, and then it has to be used by the actual user. So in complete value chain, whatever products are, I can say that panel manufacturers in HT segments, LT segments, or whatever products are used in this particular sector, specifically it will benefit a lot to the EPC companies, because they will get the contracts and then they will buy the products.
Actually, on that note, let's bring in Amit as well. Amit, exact same question to you. You're right in the thick of the action as all these numbers and targets are being discussed. What's the opportunity? If you could put some numbers to it.
So, Subhi, thanks for having us. I think, first of all, to put context to this plan, I think it's amazing. It's very futuristic. It's very progressive. And I'll tell you for three reasons. One thing is to add capacity to meet future demand, right? Today, our per capita consumption in India is literally at 1255 kilowatt hour as of 2022. US is 9 times that. China is 4.5 times that. So for the next 10 years that this plan rolls out the targets that you all have in front of you, I think for everybody in the value chain, and especially for large EPC companies which have technological difference in terms of capability, I think it's a runway of 10 years where there's going to be unabated work. I think, but more importantly, the reason why this grid is very progressive is because if you've noticed, they've spoken about 4 very, very important things. Other than adding capacity, what is more important as the goal is to ensure reliability and sustainability of the grid, right? Today, we are also talking about 3 areas. One is ISTS that you would have read, making sure that power is wheeled across all states so that we have uniform distribution of power. It doesn't matter where it's getting generated or where it's getting consumed, right? It gets into a very stable pan-India grid. Second, it is going towards HVDC technology, right? We've only done 33 gigawatts of HVDC so far till now, right? Year to date. And I think in the next 10 years, we've got to add exactly the same amount of HVDC networks. Now, HVDC is, as you know, it's high voltage, it's direct current. It reduces the transmission loss over large distances when electricity is carried. So I think our grid becomes more stable, it becomes more efficient, it becomes more reliable. And all of these things in this plan are very, very progressive. If you look at also OSOWOG, I don't know if you paid attention to that. It's between Maldives, UAE, Saudi, and Singapore. We are also talking about one grid where there's one sun and one grid. Now, all of these places, we are present, for instance, and our cost of generation in India is much lower compared to these countries. And there can be a transfer over a period of time also if this plan gets implemented. So to answer your question, I don't have exact numbers, but if you look at all the capacity targets, whether it is for pump hydro, whether it is for renewable, whether it is for transmission capex, substation, they are very, very large numbers. And we being one of the top 2-3 players, I think for KPIL, it holds really good that for next 10 years, we have absolutely a clear runway. We are more concerned about how do we enhance our management bandwidth and capability to execute all these orders over the next 10 years, right? We've had a lull over the last 4-5 years, and now suddenly there's an explosion in terms of amount of work that's coming. We've already established our design centers for HVDC and other networks in Baroda, in Mumbai, in Noida, in Brazil, and in Sweden. And I think they're constantly focusing on how to use AI, drones, helicopters, etc., to use in our execution capability, and hence becoming, faster, more reliable than we are even today by using technology in our execution. So work doesn't seem to be a problem.
No, I get that. I think you've given us, you've given us a great backdrop, and it's a good position to be in, right? You're saying next 10 years you will be a very, very busy person along with everybody else in the company. But just help us understand. Yeah, but just help us understand. I mean, as a company, given the extent of the opportunity, will you be present in all parts of the value chain when we're talking about, upping the ante on transmission infrastructure and grid connectivity? I'm just trying to get more granular details on how you will pivot or how you will capture the opportunity in what segments. And again, the same question, not a roadmap for today, but if we talk about the next 2 to 3 years, compared to the targets that you had you already factored in this kind of a network and grid expansion? We're just trying to understand if the announcements yesterday mean a much bigger business opportunity.
So let's look at us in the next 2 to 3 years, right? In the value chain, you start with manufacturing and then you go on to execution. As you know, today we manufacture transmission line towers. We are one of the largest manufacturers of transmission line towers. But because of this roadmap, there is pump storage hydro, there is hydrogen plants that are being talked about, as a result of which it gives me an opportunity to expand my current manufacturing portfolio immediately to look at hydrogen electrolyzers and other parts of the value chain in transmission and substation. Second, so far as my other businesses are concerned, we have a very large water division, and once pump hydro storage kicks in, it helps my water division to get business, which is a completely new segment that opens for us. We already have the capability to do those. There are large hydropower plants being talked about. We have a very large heavy civil division, and that is a new opportunity set altogether, which we've not done before for our heavy civil division. So it's, across the value chain from manufacturing to water business to heavy civil and, of course, transmission and substation. I think for the next 10 years, it opens a huge runway for us.
This is interesting. You just mentioned a couple of new verticals as well, hydrogen electrolyzers, heavy civil work, along with everything else that you already do. Very quickly, gentlemen, because we have, I think, less than a minute left on the conversation. So, Amit, you'll have to start thinking about money and putting more capex to work as well, right? Because you're talking about a bigger opportunity here. Maybe some sense, again, I'm trying to get back to some definitive numbers, capex this year, and now with this kind of a backdrop, what is the increase in capex that you would look at?
So, Surbhi, we've already said we're going to do around 450-500 crores of capex this year. But the good thing about transmission networks is that it's not a very capex intensive business. What you need is engineering capability, which we already have. The incremental capex is not as heavy as some of the other sectors, like heavy civil, etc. So in that sense, I won't be able to give you an exact number, but I don't see capex being a problem for us given the strength of our balance sheet.
Because you mentioned newer, Amit, because you mentioned newer businesses like getting into electrolyzers, like heavy civil. That's why I'm saying I'm trying to understand the company pivot.
Honest, we don't have plans yet because we still have to see what technology works best, etc. So I will be able to tell you that as we firm up the plans going forward.
Okay. And Mr. Gupta, very quickly, same question to you from a company perspective, additional investments or a revenue number, any number that you can leave us with, perhaps.
You see, we have already undertaken a very heavy capex in our new greenfield project coming up at Sanand near Ahmedabad. It is a capex of almost 1,800 crore rupees, which will be done in this and next financial year. And it will have a compounding effect of our turnover. We will be able to increase our sales by almost 5,000 crore per year from that project. And we intend to grow by 17 to 18%. Secondly, we are going to bring large HVDC extra high voltage cables in that plant up to 525 kV. So in this yesterday's announcement, lot of HVDC new lines are going to come up, and I think many of them may be through the HVDC cable, not through the overhead lines alone. So this is going to benefit us like anything in terms of enhanced use of extra high voltage power cables in HVAC as well as HVDC.
Okay. All right, gentlemen. Great conversation. Thank you very much. This is pretty futuristic stuff, and we hope to get more granular details as the plan rolls along as well. And good luck to both of you in terms of making the most of it. Thank you for joining in today. Well, that's sort of a curtain raiser on what to expect from some of these power companies on the transmission side as the National Electricity Plan rolls along. We'll take a break. On the other side, Avinash Gokhandi of Zaggle Prepaid Ocean Services will join in to talk about their new acquisition of span across IT solutions as well as mobile wear tech. More details coming up.
Welcome back. Well, let's focus on Zaggle Prepaid. Well, that's the next management on the show. The stock has surged, has more than doubled actually in this calendar year itself. The company has announced stake in two firms. They've acquired stake. They bought 98% stake in span across IT solutions for around 32 crores. And they've also invested around 16 crores for around 26% ownership in mobile wear technologies. To discuss this and more, we have Avinash Gokhandi, the co-promoter, MD and CEO of the company. Hi, Avinash. Good morning. And interesting aggression is what you're showing. Some inorganic growth. Let's talk about the first one then. Span. You're going to be paying around 32 crores, but the revenue that's last reported is less than 5 crores. So what's, justify these valuations for us? It's a little bit baffling, but clearly you believe there's big growth potential and there's a big scope out here. So from this 5 crores, what is the potential of this company, and give us the rationale?
Good morning, and thank you so much for having me. I like the term that you used, aggression. We would like to look at it more as, our belief in what we are building. So look, we'd already acquired 45% stake in Span Across. The brand name is Tax Spanner. And the thesis is very simple. The whole ecosystem has evolved in the last decade or so. Tax filing has gone up. There are more and more individuals and companies filing, whether it's their income tax, whether it's their GST. And we are seeing this complexity increase because the way people's salaries are getting augmented with rental income, with investments, with other sources of income, filing taxes for millennials has become increasingly more complex, and they need support. Span Across does a great job on that. We've seen, them being able to service companies like HCL, like Accenture. They have a whole host of these contracts that come to us as well, and that's extremely valuable to us. The other, of course, factor is the GST filing, right? And GST filing for mid-sized companies, smaller companies. We have a whole host of channel partners, vendors who need support in being able to do this well. And TaxSpanner brings that capability. So we've seen tremendous traction in the partnership in the last 6 months, and that's why we've gone ahead and made the acquisition.
Ash, business-wise, not questioning you. There's definitely a good rationale that you've gone ahead and bought this and you're paying 32 crores. My question to you, and from the stock market perspective, they've appreciated this move. The stock price is up more than 4-5%.
Right.
But how do you see the revenue scaling up of this acquired business? From 5 crores, where is it headed?
Well, we don't look at it from a standalone basis because the synergies are superb, right? The synergies are on both levels. One, this business
Avinash,
itself benefits from our large base of corporate customers. We have more than 3,100 corporate customers. We have more than 2.9 million users. They are able to offer tax filing capabilities to all these, companies and users. We also have a very large base of channel partners who are dealers, distributors, retailers for a variety of companies and
Right.
vendors of a variety of companies. They
Right.
are capable of serving this audience as well, and that number
Yeah.
is running into lakhs, and that's where we believe that revenues for the tax planner business would grow, revenues for the Zaggle Save business would grow because we are getting more stickiness from our corporate customers.
Avinash, hi, morning. Prashant here. Good to speak with you again after a while.
Yes, Prashant.
So my question was, so is this a service you throw in? I mean, is this because we've got lots of these companies, right, who you can you can file your tax return for, as low as I think $500, maybe lower. Lots of these. So this will be like an add-on or sweetener to that you throw in to your existing relationships, or this is really valuable that you can make money of it, if you can give us a sense.
Prashant, it's really valuable because you can make money on this. It's also an add-on, right? And today, if you look at corporate customers want a holistic, comprehensive solution. They want capabilities for their employees where they're taken care of end to end, right? So we already are a market leader in the employee benefits segment, and this becomes a great addition to that capability. From a corporate perspective, also today, a lot of companies, we may not necessarily acquire all users in a company, all employees in a company, because all employees may not be incurring expenses or claiming reimbursements from the company, right? But everybody needs to file taxes.
So what's the TAM for this from your universe? Forget about selling this to new customers, but in your existing universe,
yes.
Just some idea. Obviously, you've done internally. You've discussed this. What's the TAM? How many people? And would you charge per filing? I mean, would it be something like that? Yeah, go on.
So So it would be a part of our bundle in terms of our SaaS revenue, Prashant, right? So we'd be able to increase our SaaS fees per corporate. The number of corporates that we think would be interested in this sort of a service would run into thousands, right? Because every company has employees who have these challenges. We also sit with a very large base of, as I said, SMEs who are channel partners or who are vendors. So we have more than 500,000 of those who are active on our platform. And that's a large base to whom you can offer both, IT services, IT filing services, advanced tax, your GST. So that's another big opportunity that we see that we'll be looking to tap into.
Avinash, hi. When one looks at a lot of the broker notes and the research around Zaggle, one thing that was constantly popping up is the expectations from your vertical called Zoyer, which is where I think you target the mid-segment, the mid-market clients, right? And now you just spoke about, this latest acquisition. So I have a slightly bigger picture question for you. Tell us, if we break up the company, there is obviously the employee benefits business, there is Zoyer, there is Forex cards. So just tell us, I mean, in terms of the revenue breakup, how will the individual key verticals grow over the next 1 year or so? And all the optimism around Zoyer actually leading that growth, and I think you're talking about growing in international markets, etc. Is all that optimism well placed?
So yeah, thank you for that, Subhi. It's very well placed in our view. We've seen tremendous traction in Zoyer. 40% of our spends are now Zoyer, right? Last year, if you look at our program, last quarter, if you look at our program fees of about 126 crores, 55 crores came from Zoyer, right? So Zoyer has really taken off, and Zoyer was zero on 31st March 2023. So there's obviously, and if you think of it logically, right, everybody needs vendor payments, everybody has vendors, everybody files for GST. You have petty cash use cases for NBFCs, AMCs, brokerage houses, retail chains, very large retail chains, small retail chains. Everybody has petty cash challenges, right? So these are use cases which are very, very ubiquitous. You also have the standard use cases around SaaS spends, marketing spends, like Facebook, Google, AWS payouts. So you look at all the places where people are spending, people as in companies, And they want a better handle of how to optimize on that. They want to be able to have evidences of those spends, that those are bona fide spends. And they want to have limits and policies on the what basis these spends would be authorized or allowed, and married to a payment instrument which is going to be able to allow you a seamless recon, which is what we offer here.
So, okay, just to go back to the numbers to round things up, the last guidance given by the company for this year's growth was, I think, 45 to 55%, with an aim to hit EBITDA margins of about 10%. Are you on track with that? Or is, say, Zoyer growing and some of the other acquisitions that you're doing, is all of that, coming together in such a way that you would be exceeding the guidance on revenue or margin?
Yeah, so we are absolutely on track for that. And in fact, in the last analyst call also, we had said that depending on how our numbers shape up at the end of Q2, we may up the guidance. And, Q2 seems to be shaping up really well. All the growth that we're talking of should be 45 to 55% is organic. This is not coming in from the acquisitions. Those would be like icing on the cake. And that's how we are looking at it. All the revenue that we're talking of is essentially from Save, Propel, Zoyer, all the existing businesses that we have. Right?
And within those existing businesses, if you could rank them in order of growth, what should we expect? Save, Propel, Zoyer, what would be the order?
Zoyer, Save, Propel, right? That's the order. Zoyer being, the larger, market potential, because everybody has vendors. Vendor payouts are also larger. And followed by Save. Employee expenses is really taken off. Just today, I saw in Economic Times a large article about how business travel is doubling. So business travel is very, closely linked to, expense management. As business travel grows, your expense management capability has to mature, because, everybody is traveling. How are you going to be able to make sure that those are, according to the company policy? There's no leakage, there's no fraud. How do you make it easy for people to file their expenses? There's so many nuances and factors here.
And 10% margin this year, EBITDA margin?
EBITDA margin is our guidance. We are staying, consistent with that. We'll be around 10%, and that's what we are aiming for.
Right. Top line growth of what would 45 to 50%? That's the range, right? What you've said.
45 to 55, which we may increase, Prashant, after Q2 numbers.
Okay. All right. That's interesting. You don't want to say by how much, right?
Well, too early, but we're the numbers are looking good. Let me put it this way, really good.
Okay, numbers are looking really good. The stock's also looking really good. On margins, what I have is adjusted margins are between 11 and 13% for the full year. Is that...
So that was last year, Prashant. This year guidance is about 10%. And because we're capturing market share, that's what we're going to stick to right now.
Okay. All right. Thank you very much for joining us, Avinash, and good luck as you continue to execute. The market likes what you're saying. Stocks up 6% at this point in time. Now, two big IPOs are set to hit the street as market regulator. SEBI has cleared food delivery and quick commerce player Swiggy's confidential IPO filing. The Korean automaker Hyundai's $3 billion issue could also be India's biggest ever. Let's talk about this and, of course, all the block deals which are happening non-stop as well. Neha Agarwal is MD and Head of Equity Capital Markets at JM Financial Institutional Securities, and she's with us to take some questions. Neha, good morning. Good to have you with us here. Thank you for your time. So demand is there, and, of course, supply is rising to match it. Just a quick word on Hyundai first, if you will. $3 billion, whenever you have a large issue comes and markets have already done very well, people use historical sort of, stories about large IPOs and how they've kind of acted as a bit of a issue for the market. How would you look at it? So the basic question is, will this kind of supply overwhelm demand, or you think the market will just sort of deal with it and move on? What's your sense?
I think, Prashant, every supply of paper in the Indian markets is making its own demand. I would look at it in a very different lens. I think what we're witnessing right now in India is unprecedented era of economic development. Just look at the macroeconomic stability, the pro-business policies which are coming through. All the FI inflow mind share which India is attracting is one of the highest. So it really, every paper, whether it's IPOs, QIPs, blocks, are making massive demand history. Look at Bajaj Housing, right? It made history in the kind of demand it got through. Markets are stable. It's doing extremely well. Similarly, I think Hyundai also will not be an aberration to the market. you're going to see huge reception both from the FII and the domestic community for these transactions.
So, I mean, it gets absorbed and we move right back on, right? Or you think it could, I'm talking about the next, say, 2-3 months or so. You got many others, like Vari is coming. There is the NTPC green issue, which is coming. Of course, the two that I already mentioned. Do you think the ask price will be secondary markets consolidated a little bit, or you think, what's your sense there? Yeah.
I'll give you two data stats, right? If you see first half of financial year 25, we've already clocked in about $8 billion of IPO and about $7 to $8 billion of QIP, which is in a way akin to primary capital raise, right? Because all of that money is going into the balance sheets of companies which are looking for growth. So $15 billion of equity inflows, equity of supply of paper has come through in first half. And the way we're seeing pipeline is another $20 billion of IPOs and another $10 to $15 billion of QIPs in the offering for the next 6 to 9 months. And if you ask me, the most intuitive question will be, is there enough demand for these kind of papers? And my answer would be yes. Because as long as it's sustainable business models, as long as the cash flows are strong, great management team out there, investors have been extremely receptive.
Neha, just one question. So take all that, right? I mean, let's just talk about the IPO. IPO funds which are being raised. Have you looked at how much of the money which is being raised is going into the company? How much of it is growth capital? How much of it is investors getting an exit?
Yeah, so the first half of this financial year, it was actually 50% of primary and 50% secondary. But what I'm seeing in all the latest offerings that we're doing, I wouldn't be wrong in saying a very high delta towards movement towards primary capital, which is growth money actually going into the company, which could be in mirroring a deleverage to growth strategy. A lot of deleverage is happening, is a lot of growth capital expenditure which is coming through. Half would be at least 60 to 65% of primary raise, which is growth capital through IPOs.
Okay, got that. So,
but Prashant, I don't think we should forget QIPs because QIPs is all about primary raise, right? And actually, first half, we saw more QIPs in Indian markets than IPOs. And I think that trend will continue. Because a lot of capital expenditure comes through QIP. Sorry, Prashant.
So from here to the end of the financial year, what's the pipeline according to you looking like? IPOs and QIPs?
Would be about $30 billion at least.
20, so both put together? 30.
Yeah, so at least 15 to 20 of IPOs and another 10 to 15 of QIPs.
Okay, this is till March 25, right?
March 25, yeah. We've already done about 15 in the first half and another 25, 30 to go.
Wow, it's going to be a big year. And what's the, when you speak with the investors and pitch it to investors, etc., all these issuances, where is maximum interest? I mean, is it everywhere? Are there any sort of hot areas? I mean, in the US, for example, the big overriding theme is AI. Are there any themes here? The thing about India, of course, is there is so much, right? So many sectors, so many new emerging sectors, old, new, everything. I mean, but are there any preferences investor-wise?
So before I get into the sector thematics, I think one thing which is driving a lot of cornerstone conversations is the big E, which is your earnings. 2 years back, we were seeing a lot of price to sales, IPOs getting valued off revenue. But I think pragmatism has come through. There's been constructive conversations around earnings. And now it's more about EV, EBITDA, and price to earnings. So a lot of businesses which emulate earnings trajectory, where there's unit profitability, there's cash flows, investors are getting a much higher mind share into that. Coming to sectors, I would think renewables is one sector apart which is getting a lot of interest. You will see more than $4 to $5 billion of fundraise in this sector. It could be via IPOs or QIPs. Because one thing is that the IRR metric of this sector is phenomenal now. So investors are far more receptive to understand this sector. There's great interest from foreign institutional investors also. So renewables is one space. The other one would be overall manufacturing. I think that will be the key theme, even overriding this sector. It could be in the form of precision equipments, autocoms. We did a couple of QIPs last week, which was in the autocom space. Phenomenal response. I think the trend will continue for these two sectors as we speak.
All right, Neha, we'll leave it there. Great conversation and great insights. Thank you very much for joining us here on CNBC this morning. and look forward to our next one soon. Well, we'll take a quick commercial break here. We're going to just look at the market for a quick bit before we do that. I think 44 higher on the Nifty, 26,050 is where we stand at. So take that break. Mitesh is going to be back with us for some technical ideas. Stay with us.
Welcome back. So let's quickly look at the market and get some more trades going with Mitesh. Mitesh, how are things appearing now, and what are the individual calls you'll go with at 10?
Yeah. So things are pretty okay. You know, both the indices were quiet in the opening and they've kind of pulled back again. So I think it looks pretty good to me. As I said, I think, declines to about 850, 880 is the buying zone. And maybe if it moves higher, we'll look at a higher trailing stop loss level. That is also your trailing stop loss level. And IT, I think, is picking up pretty nicely. So there could be some movement there in the IT stocks. I have a buy on HCL Tech for targets of 1820 and a stop at about 1780 can be looked at. And the other one is ITC, which is just on the verge of making a fresh high. So buy here once it crosses day's high of 523. Take a stop at about 516 and look for targets of 540.
Okay, all right, got it. Thanks for that, Mitesh. We'll touch base with you again during the course of the day. Right now, let's look at Trent. This stock's up about 3%, and it seems that there's some favorable brokerage commentary that seems to be supporting it. Nimesh, what's up?
Well, Shirpi, there are a couple of reasons why the stock is buzzing in trade. Don't look at today's 3% move, but look at what the stock has done in the last 1 year or so. It's been a big outperformer, almost 2.8 lakh crores of market cap now. So that's the kind of company that's been now Trent. As I said, a couple of reasons the stock is buzzing. The first one being Citi has put out an initiating report on Trent. They've initiated a buy with a target price of 92.50. They are the most aggressive as far as target price is concerned. Now, Trent has and they've actually added Trent to their Pan Asia high conviction buy list, so focus list. So that's the reason why Trent is buzzing. As far as company is concerned, the company has seen a big transformation from a single format to a multi-format and a multi-category company, which has led to a revenue CAGR of almost 36% in the last 5 years. From here on, for the next 4-5 years, Citi sees a revenue, EBITDA and PAT CAGR of around 40 to 50%. So that's the kind of growth that Trent is likely to report. That's the first reason. The second technical reason is Trent is getting added to the Nifty effective from tomorrow's close. Now, I was looking at some alternatives notes, and most of them are suggesting that this will lead to an inflow of close to $670 million, which is equivalent to almost 74 lakh shares. It's a thinly traded stock, so you need to see if there is a big supplier who can provide this kind of liquidity tomorrow when it's get added to the Nifty. So, as I said, two specific reasons the stock is buzzing. One, the Citi initiation, and two, the technical reason that the stock is getting added, which will lead to an inflow of close to $670 million.
All right. Thank you very much, Nimesh, for that. That's an interesting one. Appreciate it. And thank you for getting us that. 3% higher on Trent, and what, of course, has been one of the best performing wealth creators over the last couple of years now. We'll take a break. We are back. It's The Economy with Lata, and we'll connect with Aishwari Khandelwal of India Ratings and Research, and also Alok Misra of Microfinance Institutions Network, and we put the spotlight on the MFI space and the troubles there. Stay tuned.
welcome to It's the Economy. You know, the first quarter was known to be a troubled one for microfinance companies since many of them, and the list will come up for you, Fusion, ESAF, Cridag, Bandhan, Equitas, all of them reported, as you can see, higher gross NPAs in Q1 of FY25 compared to Q4. But what has rattled investors is the disclosure made by Fusion just a few days ago, when it said that it will have to raise its provisioning from the originally estimated 350 crore to maybe 500 to 550 crore. Now the buzz in the market is, among the investor community, is probably there are microfinance borrowers out there who have 6, 7, 8, 9 loans from various microfinance institutions. So there seems to have been clear overlending and probably unbridled lending. There have been some safeguards put in by the MFI and the Microfinance Institutions Network, but we will have to yet to see the results, because Fusion is giving the impression that second quarter is going to be as bad as the first quarter. Let's ask the experts. Aishwarya Khandelwal, the Associate Director, India Ratings, who has put out an excellent report last month, and Mr. Alok Misra, the CEO and Director of Microfinance Institutions Network, the MFIN. Gentlemen, good morning, and thank you very much indeed for joining us. Well, Aishwarya, your report is about a month old, but are you getting a sense that September has been worse? I was under the impression that as the rains come, rural India will actually have more money. But what is the sense you are getting in the last 1 month?
So, yeah, I mean, once the disciplines goes away in this sector, it takes normally 1 or 2 quarters to bring back the discipline. I think so. We have written in the report also, it will take another 1 or 2 quarters to bring back the situation. I mean, the collection efficiency is getting back to the normal. Normally, the second half of the year is when the disbursements, 60% of the disbursements takes place. So normally, second half of the year is good quarters for the sector. So mostly fourth quarter when we could see some improvement on the ground. Third quarter, it will start improving, but I think fourth quarter, when we will see the start improvement.
Aishwarya, I think I asked you the second question first. Let me ask you the first question. Just detail to our viewers, what is the extent of problem that MFI companies are facing?
Right. So I would start, post-COVID-19, with the implementation of the harmonization guidelines and the removal of the interest rate caps. So there was substantial increase in disbursements by the microfinance companies. So the AUM has grown by 25%, 26%. So what this has led to, the average outstanding per borrower has increased by around 25% over the last 2 years. Plus, there was also increase in the interest rates by the microfinance companies, which has increased by around 250 to 300 basis points. So overall, the debt obligations for the microfinance borrowers has increased by around 30% over the last 2 years. And compared to that, if we use the proxy as wages, it has increased by only around 12.5%. So clearly there is an over leveraging which has happened over the last 2 years, and that we are seeing it now. The heat waves and the elections were just the triggers which has brought this thing up. But I think the things needs to improve now. Going forward from the second half of the year.
Got it. So basically overlending, inability to collect during the very hot summer that we had. Some companies even reported high attrition and, as you said, higher interest rates. Mr. Mishra, good morning to you. Thank you for joining us. Well, I think MFIN gave an advisory to your companies to reduce the number of loans per individual, what you called guardrails. Have you seen any improvement? What is the average? It looks like there are 4 or 5 loans at least per borrower.
Okay. Good morning, Lata. And because this is a very important topic, and I think Khandelwal also from India Ratings said a few things. Let me give you a little bit of time. I will put things in perspective and come to your question. If you look at the data, because we are talking about 2 critical things. One is over-lending and over-leveraging. And I think he also referred about interest rates. First, I will just give you numerical data, empirical data. As per the data which we rely on is the credit bureau. As per the credit bureau data, at the end of June 2024, 84% of clients had two or less than two lenders. So what I'm trying to say here is that the problem which is being made out to be that everybody has five loans, five lenders, six lenders, seven lenders is not true. Nearly 5% borrowers are 5 to 7% borrowers are there who have more than four lenders. And there, the ticket sizes also, if more lenders are there, will be more. So the outstanding will be more. So we saw that in some cases, such cases, there can be a problem. So we introduced the guardrails in July. So the point what I'm making here is that the thing which was being talked about is that the phenomena of 6, 7, 8 lenders is widespread is not so. That can be verified from credit information companies' database, easily available. Second thing, I think we talked about was that the average loan outstanding per borrower, which is average outstanding, credit outstanding of microfinance loans per borrower has grown very high in last 3 years. I would give you the figures from in March 20, it was 39,353. As of March 24, it has gone to 55,260, which is the CAGR of 8.8%. If you discount the inflation numbers, the real growth would not be too much. And the third point he made was about interest rates. Yes, interest rates have moved up 150 basis points to 175 basis points because of the reasons which I have earlier told about it. But let me tell you that if I take a 20,000 rupees loan and at 24%, at 22%, and at 20%, in 4%, the EMI difference works out to be 99 rupees. So that is not much of an issue. So there are other factors behind
Mr.
it.
Mr. Mishra, 1 minute. You know, your numbers, let me confront you with other numbers that we are getting.
Yeah, please.
If you looked at the MFI numbers, look at their GNPA, look at their gross NPAs in the first quarter. All of them have reported 2 to 3 percentage points more, not 20, 30 basis points. 2 to 3 percentage points more. Look at Fusion MFI. From 2.89, the bad loans have gone to 5.5%. ESAF again from 4.7% has gone to 6.6%. Equitas SFB 2.6 to 2.73. And even Bandhan, which is one of the scheduled commercial banks with a large proportion of, microfinance loans, there is a good 40. None of the other banks have shown this kind of increase. So, you are giving me an average number of, loans per borrower. But as Aishwarya's report points out, it is not evenly distributed. There are a large number of loans given in UP and Bihar, where the per capita income is not growing at the same pace that it is growing in Tamil Nadu, where you can give the same 49,000 or 50,000 rupees outstanding per borrower. But per capita income is much higher in Tamil Nadu. It is not that way in Bihar and Uttar Pradesh. So, the numbers are saying that there is a problem.
Yeah, I will. So you talked about the GNPA numbers, or the portfolio at risk numbers. And let me say that even on industry-wide, if we track the portfolio at risk 1 to 180 days, from March to July, the last figures are from July, it has gone up by 140 basis points. I admit that. But what I'm trying to say, Lata, is that it is not that we don't feel that the portfolio quality should not come back to the earlier levels. But what I'm saying is that the diagnosis should not be simplistic. There are a host of factors. Like you said about heat wave, that was one factor in May and June. But post that, we have been having other factors also. Like, for example, I would say in many parts of India, there is a movement which goes in various variants, which is asking and inciting borrowers not to repay. I would also not deny that in some pockets, maybe in some districts, there might be over-lending. So there are a host of factors. We cannot simplify to that there was an oversupply and in all over India, and that is why the NPA has gone up. We have to look at place by place.
I take that. Of course, there are a whole host of reasons. What I'm now trying to find out is the end game. There is one brokerage report which is worrying after looking at the Fusion disclosure that the NPAs over there are looking higher than peak COVID times. So let me come to that question. Where is the end game? Aishwarya, when do you see it declining? And how? Will it only be when the promoters put in more capital? Is there any other way it will get solved?
So as of now, I mean, the large NBFC MFIs, I think, are adequately capitalized. Most of them are operating at around 3.5 times of leverage. I think the more challenging situation will be for the small and mid MFIs. The funding availability for them would be a challenge from now on, because I mean, the lenders will be cautious in lending to them. So I think the growth levels of the overall industry will come down to around 15% in the current year, and credit cost for the overall year we expect to for the full year expect to increase to around 4.5% for the full year. So I think from the fourth quarter onwards, I think situations will start improving. Yeah.
Yeah, we do have a very good harvest. It's a La Nina year, so hopefully that should alleviate. Mr. Mishra, Dr. Mishra, what's your sense? Have you been in? Has RBI reached out to you? How do you see who is bringing the extra capital, and when do you think the wheel can turn?
I think what we see is that if I look at, because September I don't have data, hardcore data, but field reports are coming. So the picture is mixed in September. Some people say they see improvement. Some say it has stabilized. Some say it has gone similar to August. But what the field situation is saying, that with the implementation of guardrails which we have put in, the lower disbursements, I think our sense is by October, by November, you will see good stability. December will stabilize, and in Q4 you will see that we should be back to normal, because the harvest is normal. It is good, as you rightly said. The discipline is returning back, and we are taking some additional measures to strengthen processes. That should help us back. On capital side, I think, as Asura was telling, the top players who control 90% of market are well capitalized. They have around 25% capital adequacy. That I don't see much of a challenge.
Okay. Just a very quick one sentence, sir. How do you control people from giving the 5th, 6th and 7th loan? Yeah.
So see, that as you said earlier, when we introduced the guardrails, it is not an advisory. It is from the SRO, the members who are our members. It is a directive. And we check the quarterly disbursements made during the quarter from the credit bureau for every company. And if we see violations, we will take the enforcement action as per our charter.
All right. That's good to hear, sir. And anyway, fourth quarter is not that far away. Thank you very much, Aishwarya and Dr. Mishra, for throwing more light on this budding problem. One hopes that it is not more than a couple of quarters away in terms of solution. Wrap up on Bazaar. Short past is coming.